Hello everybody, my name is Jay Gragnani here at Dorsey Wright & Associates for today's India Minute. Today is April the 21st as we're filming this on a Thursday, and here in the U.S. the market is on holiday on Friday the 22nd, so we're filming this a day early, get this out to you, make sure you have the information. But what I wanted to talk to you about today is just some perspective on the Indian equity market, and one way that we can do that and gain some perspective on the Indian market is to look at the overall trends of not only the stocks that trade in India, but also the indexes themselves. For instance, the Nifty index. If we were to look at a chart of the Nifty index, and one that I happen to look at is the 50-point chart, so each box being worth 50 rupees on that chart, and if we were to look at that chart and hit the expand button, it shows a very interesting picture that we've seen really since the market bottomed back in March of 2009. In April of 2009, just about a month later, what we saw is this index, the Nifty index, moved back into a positive trend, and ever since, the index itself has continued to move higher, peaking recently in November of 2010 at 6,300. Came very close to moving to new all-time highs, but really what we've seen over the past six or 7 months now is a consolidation from the index, from Indian stocks in general, bringing the index right back down to its long-term positive trend line, its bullish support line. And since then, with March, the end of March and now into April, we've seen some new demand come back into the Indian stock index itself, moving back to a buy signal. And what that has also done is we've seen the percent of stocks trading in India that are in a positive trend, we've seen that number pass back above the 50% level for the first time since last summer. So that's very interesting when we look to see of the trends that are taking place in the Indian market right now. Back when the index peaked back in November of 2010, there were far more than half of the stocks in the inventory in the universe trading in a positive trend. And now, just over the course of the past couple of weeks, we've seen that number increase back to above 50%, really for the first time in about 6 or 7 months. That in and of itself would be certainly a healthy sign for the overall market, and we've certainly seen some positive signs going forward. The next breakout, 5950, would be another interesting upside breakout to the Indian Nifty index. On the downside, though, the support would be seen around the 5550 area, 5500 being a pretty notable breakdown, so certainly something to watch for on the downside. So, as we look at the generally positive landscape right now that's taking place within the Indian indexes, we see a number of stocks that are showing very positive signs. A couple I wanted to mention to you today would be one, Hindustan Zinc. Symbol is HINDZINC. -IN in our on the Dorsey Wright DWA website. This is a stock that has all 5 of its attributes that we keep on stocks are positive, and this is one too that's similar to the Nifty index. It's trading in an overall positive trend, has moved to actually recently moved to new highs, and the fact that this stock has managed to move to new highs before the index would be seen as a positive divergence for this stock, so certainly another positive sign there. The other stock that I came across my screen was the company is HCL Technologies, symbol HCL Tech, TECH. And once again, another name that continues to trade an overall positive trend, continues to show the picture of demand being in control here. And this stock, with the recent move to 520, has actually not only moved to a new 52-week high, but has also moved to a new all-time high here. So, very, very positive looking picture here. Another name that's showing good trending characteristics as well as good relative strength characteristics, as seen in that 5 out of 5 technical attribute reading. So, as always, we certainly thank you for joining us, and we certainly look forward to be back on with you next week for the next India Minute. Thanks.